Brace yourself. Opus Genetics Inc., IRD, just delivered its latest financial results, and the numbers are stirring up quite a reaction among investors and analysts alike. The company's second quarter loss was reported at 12 cents per share, which actually beat the Zacks Consensus Estimate of a 25 cents loss per share. For context, this also marks an improvement from last year's Q2 loss of 30 cents per share. With all figures adjusted to exclude one-time items. Now here's the twist. This result represents a positive earnings surprise of 52%, much higher than predicted. Just last quarter, the market braced for a loss of 34 cents per share. But Opus Genetics came in with a smaller loss of 32 cents per share, surprising analysts then by nearly 6%. In fact, in the past 4 quarters, this company has outperformed consensus earnings per share, EPS forecasts, 3 times. Clearly, something is stirring under the surface. Turning to revenue, Opus Genetics recorded $2.88 million in sales for the quarter ending June 2025. While this is a significant jump compared to the $1.11 million posted in the same period last year, it still fell short of expectations, missing the Zacks Consensus Estimate by over 12%. Nonetheless, the company has managed to exceed consensus revenue estimates in 3 out of the last 4 quarters. That's a track record worth noting, even if this one fell a bit short. But here's where it gets controversial. How much do these quarterly numbers really matter for the future direction of the stock? The short-term movement of Opus Genetics price can swing drastically following an earnings report. But many seasoned investors agree. What management says on the earnings call about the coming months can prove even more influential than the raw data. Since the start of this year, Opus Genetics shares have tumbled about 6.7%, while the overall S&P 500 has climbed 9.6%. It raises a critical question. Is this company a temporary underdog poised for a comeback? Or are investors right to stay cautious for now? Wondering what the future holds for Opus Genetics? Unfortunately, there's no crystal ball, but a reliable indicator lies in how earnings estimates for the company evolved over time. This isn't just about the numbers for next quarter. It's about the trend in analyst expectations. Historically, changes in EPS estimates often foreshadow near-term stock price shifts. You can monitor these trends yourself or turn to time-tested tools like the Zacks Rank, which has built a strong reputation by tracking these revisions. Here's the part most people miss. Just before this quarter's results were released, forecast revisions for Opus Genetics were mixed, not leaning strongly positive or negative. The company holds a Zacks Rank number 3, hold, at present, suggesting that, at least in the near term, shares may keep pace with the broader market rather than stand out. Looking ahead, consensus currently sees Opus Genetics posting a loss of 25 cents per share on $3.44 million in revenue for the upcoming quarter, and an annual loss of 99 cents per share on $15.66 million in revenue for the full year. Watch closely. In the aftermath of this report, these numbers could shift. It's also worth considering the bigger industry picture. Opus Genetics sits within the medical, biomedical, and genetics sector, which, according to the Zacks industry rank, currently falls in the lower 41% out of over 250 industries tracked. Here's something to debate. Research indicates that industries in the top 50% by Zacks industry rank outperform those in the lower half by more than 2 to 1. Is this a sign to avoid stocks in the lagging half of the industry rankings? Or do contrarian opportunities exist precisely where most investors lose hope? Curious how peers are faring? Keep an eye on Health Equity HQY, another player in the medical sector, which is due to post its quarterly results on September 2nd. Analysts project Health Equity will announce 92 cents per share in earnings, a 7% increase from last year, on revenue of $318.81 million, up about 6.3%. Even more telling, Consensus estimates for health equities earnings have ticked slightly higher over the last month. And here's a final thought to chew on. Should investors take a chance on Opus Genetics IRD, given its recent history of mixed surprises and an industry ranking in the lower half? Or is the market being overly pessimistic, setting the stage for a rebound if management can deliver good news going forward? We want to hear your take. Does Opus Genetics look like a turnaround play to you, or do the risks outweigh the potential? What factors would sway your decision to buy or avoid this stock? Share your opinion and challenge others. Sometimes the best insights come from lively debate.